Before I turn to you, Mark, let me just follow up on something, Vahan, you just mentioned, and that is one of the reasons, if I'm understanding it, that you believe that the Fed should cut rates and should do it in a series, in other words, more than just one over the next, let's say, year or so, is because you are concerned about the amount of debt service cash that the federal government has to pay at these higher rates to service the federal debt. You lower those rates, the debt service comes down, and that frees up more money for other things like defense or human health and other things.
Well, you're correct that I'm concerned about that. However, the Fed is probably going to ignore that because, as I said, that's not in their mandate. They're going to say, let the government reduce the debt, do it on the fiscal side rather than the monetary side. But I think the Fed will face pressure to do something like that.
Yeah. All right, Mark, let me turn to you and get your view on interest rates and the numbers that came out today. You're in the probable rate cut camp, but have recently said and sort of reiterated just a few hours ago the idea that, well, there's a long shot possibility maybe that they would even raise interest rates, though that is not your base case.
Yeah, thanks, Tyler. Thanks for having me. No, it's not our base case. Our base case is for the Fed to cut rates once this year. We think that given the recent evolution of inflation, the reacceleration of inflation, indeed, that we got in the first quarter, and the still strong prints that we saw even in March, we think that we are on a trend down on inflation. It's gradually going to come down later in the year. And in that case, the Fed will be allowed to or will be able to cut rates. But we don't think it will be able to do that more than once this year.
What are you seeing, Mark, in terms of the economy? We had a GDP number yesterday that some people were disappointed by. Where are you on the current health of the U.S. and the global economy, for that matter?
Right. So we think the health of the U.S. economy is still very good. The overall economic activity is still strong. It's true that GDP yesterday printed lower than expectations by quite a margin, actually, with the 1.6% growth rate. But the underlying demand is still very strong. A lot of that weakness was reflecting in strong imports, was reflecting in destocking, so lower inventory contributions. And so we think that if you look at the overall demand, it's still pretty strong. And in fact, it hasn't changed much from the pace we have seen in the third and fourth quarter of last year, where we had remarkably strong growth. This, together with the monthly profile of consumption that we got this morning, tells us that there is still quite a bit of momentum as we go into Q2. So we think that there is some support here on consumption in the second quarter. For the outlook further down, we see some gradual slowing and returning basically back to trend growth towards the end of this year, but still a pretty resilient economy until then.
Steve, why don't you just react to what you've just heard? And I guess one of the questions I would have is why on a day when inflation came in a little tiny, maybe a bit hotter than expected, would yields decline, as Vahan pointed out?
Well, I mean, first of all, yields have come a long way in the past month or so, so there's plenty of room for them to come down. They overshoot. I think it's because of what I was saying earlier, Tyler, because I think the market was braced for the possibility that extra inflation could have shown up in March. And while Vahan is right and Mark is right, we did have a higher number in March than we would have liked. It was still not the number. I went into the numbers, Tyler, with a very simple metric in my mind. 0.3 was good, and 0.4 was bad, and it came in at 0.3. So that was okay. I am really interested, though, in what economists and forecasters are doing for the second quarter. We're going to report our Fed survey data on Monday, but I am seeing some numbers, Tyler, if you can believe it, north of 3%. It may be because of what was just discussed. We've had 2 quarters of inventory drawdown. We might have an inventory build. We had a big negative shock when it came to terms of trade. It was minus 9.9%. So almost a full percentage point. That may be something that comes back. But I'm seeing numbers. I think Goldman just put out their tracking forecast at 3.5. Atlanta Fed just started GDP now at 3.9%. So I get what Mark is saying about, hey, this weakness has to come eventually, but at least in the initial drawing of the second quarter outlook here, I'm not seeing much weakness, and I didn't see much economic weakness in the first quarter either.
Vahan, let me give you the last word and let you put on your chief investment officer hat and talk about a couple of the areas you like: financials, biotech, IBM, and Verizon.
Yeah, okay. So first of all, I would say I agree with what Steve just said. I do expect second quarter GDP growth to be much better. And as Mark pointed out, one of the reasons we saw a weak number recently was because of those net exports. But yes, I have been taking advantage of what's been going on in the market. One thing I've been doing is buying a lot of T-bills. I continue to buy short-term T-bills and roll them over because I believe the Fed is giving us a gift by keeping rates this high, even though I believe rates shouldn't be that high. But I'm taking advantage of that with excess cash that I don't have a strong conviction for. But I'm also taking advantage of sell-offs in the market, and I have put some money to work in a couple of ETFs, the XLF, which is the financial ETFs, and the XBI, which tracks biotech companies. I do like IBM and Verizon, and I would point out that these are two stocks that are very much like bonds. They pay very generous dividends, but unlike bonds, those dividends grow over time. Both companies have been increasing their dividends every year for a long period of time. And even though you haven't seen much of it, they do give you the opportunity of getting some capital gains over a long run.
Vahan.